Greetings, fantastic viewers of the Forexer channel. Brace yourselves for an exciting revelation of the ultimate strategy with the MACD indicator in today's video. Your support means the world to us, so be sure to hit that like button and subscribe to our channel for a steady stream of valuable content. The moving average convergence divergence, commonly known as MACD, stands out as one of the simplest and widely used indicators among traders. Essentially, it is a trend-following indicator that illustrates the relationship between two moving averages. So first, let's apply it onto our chart. First, you need to go to the indicator section on the TradingView website. Type in a MACD and click on the one that appears on the top of the list. Now, before we start, we first need to understand how the MACD works. We can see that there are four components to the MACD. First, we have these two lines, the MACD line and the signal line. Notice the difference between the two. The MACD line moves faster and is more sensitive to price changes, making it the main focus of the MACD indicator. Compare that to the signal line, which reacts slower to price changes, giving it a smoother appearance. Next, we have the histogram, which represents the difference between the MACD line and the signal line. For example, if the line crosses above the signal line, the histogram will turn green. Conversely, if it crosses below, the histogram will turn red. The gap between the MACD line and the signal line also affects the size of the histogram. As you can see, if the two lines are further apart, the histogram gets bigger, and if the two lines get closer, the histogram becomes smaller. And finally, we have the zero line, which simply represents the center of the MACD indicator. Traders utilize this indicator to identify momentum by examining the crossovers between the MACD line and the signal line. Let me illustrate this with an example. If the MACD line crosses above the signal line, it indicates that the market is experiencing an upward momentum. Conversely, if it crosses below, it indicates that the market is in a downward momentum. Traders can also utilize the size of the histogram to gauge the strength of the trend itself. If the MACD crosses above the signal line while the histogram is expanding, it indicates that the upward trend is gaining intensity. Conversely, if the histogram is contracting in size, it suggests that the upward trend is weakening. Now, we've already established that the MACD is based on moving averages. So the question arises, why should you use the MACD rather than just relying on moving averages? Well, let me provide you with a quick comparison. Here we use the default settings for the MACD configured as 12 and 26. Additionally, two exponential moving averages are set to the same values, 12 and 26. Whenever there is a crossover on the moving averages, there is also a crossover on the MACD, albeit between the MACD line and the zero line. It's crucial to note that we are not focusing on the zero line when analyzing the MACD. Instead, we look for crossovers between the MACD line and the signal line. As illustrated, the MACD crossover provided an earlier entry signal compared to the crossover on the moving averages. This is why I prefer the MACD as my momentum indicator. Now, let's discuss the various strategies that you can employ with the MACD indicator. First, a common mistake that traders make is using the indicator in isolation. Let me illustrate why relying solely on the MACD can be a problematic approach. So here we can observe that the overall market is in a downtrend. However, the MACD is crossing upwards. Notice how the signals are contradictory. The MACD indicates a bullish momentum, but the market is clearly in a downtrend. This is precisely why relying solely on the MACD is not advisable. The MACD primarily reflects short-term momentum, and as traders, it's crucial to consider the long-term trend. We should avoid trading against the trend. Therefore, I recommend a simple yet high win rate strategy for beginners. By combining the MACD with a long-term trend indicator, such as the 100 EMA, we can securely trade the MACD while ensuring that we align with the direction of the long-term trend. Here's how you execute this strategy. The initial step is to identify the long-term trend by examining the 100 EMA. If the price is situated above the 100 EMA, it signifies an upward long-term trend. Conversely, if the price is below the 100 EMA, it indicates a downward long-term trend. Once you've identified the trend, the next step is to search for crossovers on the MACD that align with the same signal as the long-term trend. In this specific example, with the long-term trend indicating an upward direction, we only consider signals when the MACD crosses upwards. At this point, you would initiate a long position. For your exit strategy, you can place your stop loss at the nearest swing low and set your profit target at 1.5 times your stop loss. As demonstrated, this trade resulted in a profit. Now let's examine another example. Are you ready to dive into the world of finance? Look no further than Fastbull.com. Fastbull is your go-to website for quick and reliable financial news and real-time market quotes. Our comprehensive coverage keeps you informed about market trends and empowers you to make well-informed investment decisions. But Fastbull offers more than just numbers and charts. We provide in-depth analysis and expert insights from renowned columnists and institutions. Whether you're interested in the Palestinian-Israeli conflict, the Russia-Ukraine conflict, or other trending topics, Fastbull delivers the latest news and perspectives. Looking to enhance your trading skills, Fastbull offers a range of educational resources, including courses on optimizing machine learning models, mining cryptocurrencies, and generating trading signals. Our Trading Academy and Trader Talks provide valuable insights from industry experts. Upgrade to Fastbull Pro for exclusive privileges, such as quick access to real-time news, expanded watch lists, and comprehensive macro data. With Fastbull Pro, you can take your financial knowledge and trading strategies to the next level. In this chart, we observe that the price is below the 100 EMA, signaling a downtrend in the long term. Following this, a downward crossover occurs on the MACD, serving as our entry signal to go short. For the stop loss, position it above the nearest swing high, and set your profit target at 1.5 times your stop loss. As depicted, the price reaches our profit target, marking this trade as a successful one. For advanced traders seeking to maximize profits using the MACD indicator, it is important to go beyond basic crossover techniques designed for beginners. It is crucial to remember that crossovers tend to be effective primarily in trending markets. Therefore, advanced traders should explore additional strategies to enhance their trading results while using the MACD indicator. By employing more sophisticated approaches, experienced traders can optimize their trading decisions and potentially achieve higher profitability. When the market is in a range-bound condition, relying solely on the MACD indicator can result in numerous false signals. To increase the win rate in such scenarios, it is advisable to employ a more advanced version of the strategy that combines the MACD with price action analysis. By integrating price action with the MACD, traders can enhance the effectiveness of their trading decisions. Here's how the strategy works. The first step is to select a time frame for analysis. In this case, we will use the 4-hour time frame. Next, we need to identify a key level within this time frame. By observing price action, we can determine a resistance level where the price went up, hit, and reversed downwards. Once the price approaches this key level again, we anticipate a downward reversal. However, touching a key level does not guarantee a reversal, as prices can break through. To confirm the downward momentum, we use the MACD indicator. Most traders wait for the MACD to cross over downwards before taking a short position. However, this may result in a late entry, as the downward movement has already occurred. To get an earlier entry signal, we zoom into a smaller time frame, 2 time frames below in this case, the 2-hour chart. We wait for the MACD to cross over downwards in this smaller time frame and take a short position. Returning to the 4-hour chart, we compare the 2 entry signals. By using the crossover from the 2-hour time frame, we would have entered the trade earlier, comparing both trades. We can see that although they were both profitable, the smaller time frame crossover provided an earlier entry signal. In summary, the strategy involves selecting a time frame, identifying key levels using the MACD indicator for confirmation, and potentially getting an earlier entry signal by zooming in to a smaller time frame. Let's analyze the pounds to dollars on the 2-hour time frame. Towards the left of the chart, we can observe that prices declined, hit a key support level, and reversed upwards. This support level becomes significant as prices return to this level. We need to confirm the presence of actual upward momentum by zooming in 2 time frames below and applying the MACD indicator. Using the MACD, we wait for it to cross over upwards, indicating bullish momentum. Once this crossover occurs, we can take a long position. Now let's return to the 2-hour time frame and discuss the exit strategy. For the stop loss level, it can be placed at the key support level. As for the profit target, it is recommended to set it at 1.5 times the stop loss. In this trade example, the trade ended up being profitable. I have shared high win rate MACD strategies that you can immediately apply. In return, I kindly ask for your support by liking the video and subscribing to the channel. It only takes 2 clicks but means a lot to me. Feel free to explore my other videos as well. Thank you for watching, and I look forward to seeing you in the next video.